Hello there. Now today we are going to do the first sum of the final accounts. So let's read. Daya and Shama are the partners sharing profit and losses in the ratio 1 is to 1. So 1 is to 1 ratio is means equal. Daya and Shama are partners sharing equal ratios. So the following timelines is given and some additional information means some adjustments are given. So they are telling to prepare trading profit and loss account for the year and a balance sheet means we have to do a full-fledged sum. So let's start. What things are given? Stock. So now while reading the items we need to classify them into the respective ledgers. So first, stock always comes in trading account debit side. So we will write TDR or we can write TD. TD means trading account debit side. Bills receivable is an asset, so we will write A. Wages and salaries. See, now wages and salaries both are different, but wages, so the first one is written wages, so it will come in trading account and debit side, TD. Debtors are assets. Bad debts comes in a profit and loss account, so it comes in PD, profit and loss account debit side. Purchases comes in trading account debit side means TD. Motor car is an asset, so A. Machinery is asset, so A. Audit fees is an expense, it comes in profit and loss account debit side, so PD. Sales return, it's from less minus from the sales. Discount is given on the debit side, so it will come PD. Building is an asset, so A. Cash at bank is also A. Investment is our A. Advertisement is our expenses, PD. Royalties are of trading account, so TD. Next, the credit balance. General reserve. General reserves are liabilities, so L. Capital account. The capital balances are should be written in the partners account, so they are on the credit side, so it will come on the credit side. So it should be written partners capital account credit side, PCC. Creditors are liabilities. RDTs should be less from PD, it's from partner debit side, profit and loss account debit side. Sales is from TC, trading account credit side. Outstanding wages are liabilities. Purchase return should be minus from purchases, and the discount which is given on the credit side, so it is an income, so it is PC. This is the classification for the ledgers. Now the closing stock. Closing stocks, as I said, all the adjustment have two entries, two effects, so it will come in two accounts. So the closing stock comes in trading account credit side plus in assets. The next is depreciate building and machinery 5% and 3%. Building we have to depreciate it 5% and machinery we have to depreciate 3%. So to remember them we have to depreciate them, so we will put a dot mark on building and machinery. Building and machinery, here one dot mark, so that we can remember that we have some adjustments there. Here two entries will be there, which one will be less from the assets and the next entry from PD, because depreciation is an expense. Bills receivable include dishonor of bill. Now the bills receivable means some money is going to come and we have put them in the bank, but it got dishonored, means we were receiving some money, it got added, so the bills receivable we are going to minus them from the bills receivable and we have to add it into the debtors. Okay, so we will put debtors mark so that we can add them in the debtors, and from bills receivable we can minus them, so less them. The next is goods worth rupees 1000 taken by Daya for the personal use was not entered in the book. So Daya, a partner, took 1000 worth rupees good from the factory. So we have to have two accounts. First, the 1000 rupees entry will be gone in the should be gone as drawings in the partners capital account, so it will first entry will be in partners capital debit side, so PCD, and other entry will be in partner trading account credit side. We have to mention that some goods has been taken for personal use in the trading account. The next is write off 1800 as bad debts and maintain RDD as 5% on debtors. So two things has been given in the debtors as known in the pro forma of this. We have learned these things. So the bad debts should be less from the debtors and RDD should also be less from the debtors. So one more adjustment in the debtors, so we have to put here 2 dots. The last entry is goods of 6000 was sold. Okay, it was sold but no entry was given. So it was sold, so we have to add in the sales. Okay, fine. So it will be in the trading account credit side. And one more entry, that if we sell some goods we will receive some money, so the receiving money should be known as debtors, so we have to add them into the debtors. Okay, into the debtors, so it will come in assets also, the two entries. This is the classification of the trial balance and the adjustment. So let's start with putting them into the respective ledgers. Let's go ahead. As I told before, always the first entry should be in the trading account is the opening balance. So the opening stock, it is also known as opening balance. The first opening balance is written here 65,000, so the entry will be 65,000, and below them it should be purchases. So let's see, any purchases are given here. Yes, purchases are 1,48,000. As I told, purchases have returns, so the purchases should be written here in the inner column, 1,48,000. So let's see the purchase return. We should write here less purchase return and purchase return. How much purchase return is given here? It is 4,000. So 4,000 we have to less here, and it should be in the bracket. 1,48,000 minus 4,000 is 1,44,000. The next step after purchase, it should be compulsory the sales. So by sales is written on the credit balance. It is here 2,85,500, 2,85,500 as it is given in the inner returns inner column. So less sales return. Sales return is given 2,000, so into minus 2,000 from them. It is minus, so it will come in bracket and we should less it. The amount is 2,83,500. Now we have to see this trial balance and put them according to the ledger. Bills receivable. Bills receivable is in asset, so we have to write in the asset side. So on the balance sheet, asset side, bills receivable. It is there 28,000. As we know, bills receivable has an adjustment. I have put on the dot. The bills receivable adjustment is 3,000. So we have to less it. So less dishonor 3,000. So we have to less it. The answer is 25,000. We have to remember another adjustment we have to add in the debtors, so we will add later on. The next is wages and salaries. It will come in trading account. So 2 wages and salaries. The answer is 9,000. So no adjustment, then outer column. Okay. The next is bad debts. Okay. Sundry debtors. Sundry debtors has 2 adjustment, so we have to write the first sundry debtors on the balance sheet. Sundry debtors, the amount is 1,32,500. 1,32,500. We have to we have to add them. So first we have seen the bills dishonor one, the adjustment one. So we have to add the bills receivable. So add dishonored bill. Okay, the dishonored was 3,000. So we have to add rupees 3,000, and it is plus, so no bracket. 1,32,000. So I am using a calculator. 1,32,500 plus 3,000. It is 1,35,500. Okay, so anything else? In the adjustment we have seen, sorry, we have to not write here, we have to write just below it, 1,35,500. As shown in the adjustment here, the goods were sold but no entry was right, so we have to add the unrecorded sales. So unrecorded sales are also being added. Unrecorded sales 6,000. So 1,35,500 plus 6,000 is 1,41,500. Now as we go forward, there are bad debts. Okay, so as the bad debts comes, we have to see the actual bad debts given written in the adjustment. So the bad debts given in the trial balance and the RDD given in the trial balance are known as the old one, old bad debts and old RDD. But in the adjustment, the RDD and bad debts are given, they are the new one, so we will call them new RDD and the new bad debts. So first we have to less the new bad debts and new RDD. We will less from here new bad debts. It is how much? 1,800. Will less from this total, less 1,800. The answer is 1,39,700. Now we will less RDD at 5% on this amount. Less RDD at the rate 5%. First I'll use the calculator and I will also show how to calculate 5% on the amount. So 1,39,700 into 5% is 6,985 rupees. Okay, first I'll show you how to calculate this. We'll write the amount as 1,39,700, okay, into 5%. We have to write 5 upon 100. 5% is 5 upon 100. The 2 zeros cancel off and the 2 zeros cancel off. Now this into this amount. So 5 sevens is 35. 3 will be here. 5 nines are 45. 45 plus 3, it is 45 plus 3, it is 48. 4 year, 8 year and 4 year. 5 threes are 15. 15 and 4 is 19. So 9 year and 1 year. 5 ones are 5. 5 plus 1 is 6. So it is 6,985. 6,985. Here is how we can calculate 5%. Okay, so if we less this amount from this, the 1,39,700 minus this amount, it will be 1,32,715. So as I told that the RDD and the bad debts have been given in the adjustment, they have two effects. So the next effect will be in the profit and loss account. Always remember, while writing bad debts and RDD, we have a formula, so we have to put this formula in the profit and loss account, that is debit side. So let's write, we have to leave one line from the both the columns, as we do not know that if the gross profit comes or gross loss comes. So leaving one line, we have to write 2 old bad debts plus new bad debts plus new RDD, then all the total. Okay, then you have to less the total from old RDD. Okay, this is the formula. 2 old bad debts, we have to add new bad debts, we have to add new RDD, then from the total we have to less old RDD. Here it is given, old bad debts is 1,000, we have to add new bad debts as 1,800, we have to add new RDD which we have calculated here, it is 6,985. We have to add all the three of them, 1,000 plus 1,800 plus 6,985, it is 9,785. We have to less the old RDD. Old RDD is given here, it is 1,800. So we will less 1,800. 1,800 have to less, we will put him in the bracket 7,985. It is the total. So here it is how we have to calculate this. So the next is purchase. We have done motor car. Motor car is an asset, so you have to put motor car in the asset side, no adjustment. Then directly in the outer column, motor car, the amount is 68,000. Okay. The next is machinery. So we have a machinery, we have adjustment on the machinery. Machinery is an asset, so in the asset side we have to write machinery. As we have adjustment, we have to write in the inner column 114,800. It is 1,14,800. You have to less the depreciation. You have to write depreciation at the rate how much. In the machinery we have 5%, so 5% on 114,800. So 114,800 is 5% is 5,740. Okay, you have to less it from the total. Amount is 109,060. As I told, depreciation we have second entry, so we know that depreciation have two depreciations in the book. Then we have to make a depreciation account here. Two depreciation account, we'll underline it and write the names that are going to depreciate. So as calculated machinery, and there is also building, we'll calculate it further and write the amount in the remaining column. So we got in the machinery for the depreciation, that is 5,740. So next year it is given audit fees. Audit fees is profit and loss debit side, so it will be 1,200. So we will write 2 audit fees, it is 1,200. Okay. The next is sales return. We have done it. Discount, we got a discount, so we have given a discount, it is on the debit side, so it is 2 discount. The discount amount is 2,300. Okay. The next is cash at building. Building is a asset, so we have to write in the asset side building. Okay. The building amount is 75,000, inner column, less depreciation. Depreciation is given here, it is for it is given is 3%. So at the rate 3%, we have to calculate 75,000 3%. So 75,000 75,000 into 3% is 2250. 2250. We have to less this 2250 minus 75,000. It's 72,750. 72,750. Okay. Now, as I said, we have left left an amount here, so you have to write this amount here 2250. So you have to write here 2250. Now both the amounts we have got, so we have to add the both and write the total answer. So 2250 plus 5740, it is 7990. 7990 is the total depreciation that we have been depreciated. The next year it is cash at bank. Cash at bank is an asset, so if you write in the cash at bank, no adjustments, outer column, cash at bank is 12,000. Okay, cash at bank is 12,000. Okay. Now the next is investment. Investment is an asset, so we have to add the investment. Okay, here it is given 10% investment. So in the trial blanks, as in order, it is given 10%. So it is called as hidden adjustment. This is the written adjustment, this is called as hidden adjustment. The adjustment which is itself given in the trial blanks, it is known as hidden adjustment. So we have to calculate 10,000 in 10% investment for the year. So investment being getting money, the 10% we have to add it. Okay, so the investment is 20,000. Okay, plus we got the interest. Okay, the interest is 10%, so 20,000's 10% is 2000 we have to add it as 22,000. As I said that adjustment, whether it be the adjustment or hidden adjustment, it has two entries. Interest that we earned on the investment is an income for us, so you have to add the 2000 in profit and loss account debit side. So you have to write here, being living in one line, you have to write by interest on investment, that is 2000. Got it? The next is advertisement. So here also there is an hidden adjustment. Okay, advertisement, being it is an expense, it is on profit and loss account debit side, so you have to write to advertisement. Now the advertisement is of 4500. Okay, but the main thing, it is paid for only 9 months. As preparing the final accounts, we are preparing it for 12 months. We have to pay for 12 months, but here they have only paid for 9 months. So from 12 minus 9, we have not paid for 3 months. It means we have been outstanding. So let's calculate. For 4500 amount, we have been only paid it for 9 months, so we have to divide this amount. So how much for a month? Okay, so let's divide it. So 4500 divided by 9, it is 500 per month. Okay, so for a month we are paying 500 for advertisement. We have paid it for 9 months and paid 4500. For the remaining 3 months we have to pay 500, so the amount will be 1500. Okay, so we have to pay this, it is remaining. So the remaining amount which is not been paid, it is known as outstanding. So we have to add the outstanding amount. So here we will write plus outstanding, we will write 1500 here, and the total in the outer column. So 1500 plus 4500, it is 6000. As 1500 is an outstanding means we have been left to pay, so it is an liability for the company. So we will write here outstanding advertisement in the liability side, because it is an leftover. So 1500 outer column. Okay, the next is royalty. It is a trading account side, so to royalties. So royalty is for 3000, no adjustment, then 3000 here. So the debit side has been cleared. Now we have to do the credit side. Now let's see the general reserve. As it is a liability, we have to write in the liability side general reserve. Okay, it is 14,500. Next, the capital balances are given of Daya and Shama. Okay, so we have to write these balances in the respective capital accounts. So we have made the capital accounts here. Okay, so we have to write they are the balances to write. We have to write the balances as by balance BD. BD means brought down. We have been copied them here, so it is brought down. So in the Daya's column we have to write 1,60,000 here, and in the Shama's column we have to write 1,20,000 here. Okay, next, creditor itself being liability, so it will come in the liability side as creditors. Okay, the creditors is 98,000, so 98,000 will be coming here. RDD we have done it, sales we have done it. Outstanding wages, it is given outstanding wages directly in the trial bank, so it is a liability. So outstanding wages, okay, it is 700. Next, purchase return 4,000 we have done, and the remaining is discount. Discount is PC means profit and loss account credit side. Discount, we have received the discount, so it is an income. So by discount 1,800. The trial balance has been done. We have to now see the remaining part in the adjustment. The first, it is given closing stock. As I said, closing stock have two effect, but first closing stock is here by closing stock, it is 40,000. It is 40,000. The next it will come in the asset side as closing stock. Here closing stock, it is 40,000. Okay, depreciation is done, bills dishonor is done, goods, yeah, this adjustment is left. Goods taken by the Daya. Okay, so drawings has been made, so we have to write here 2 drawings. It is 1000 and it is only made by Daya, not Shama. Then Shama column dash, and the second adjustment, sorry, second effect will be written here by goods taken for personal use. Okay, so it is 1000, right? 1000. Okay, RDD and bad debts are done, 6000 is done. So now let's do the total. Being the credit side has been the heavy, so we'll write the credit side's total 285 300 500 2,83,500 plus 1000 plus 40,000. The total is 3,24,000 3,24,500. But as I said, one adjustment is remaining, that is we have said the sales we have been made, the unrecorded sales we have only added in the debtors one, not in the sales, so we have to add them. But I have been left over, so I will write as unrecorded sales. It is 6,000. Okay, so we will add 6,000 here, so the total is 3,30,500. Okay, being this side heavy, so we have to write on the both the side 3,30,500. Now we have to less this all expenses from this amount, so less 65,000, less 1,44,000, less 9,000, less 3,000. So the amount is 1,09,500. It is our profit. So to gross profit, I have to write this. So as I told, you have to carry forward this amount. It is gross profit brought down, carried down. We have been calculated. Now this gross profit will move here, so we will write by gross profit brought down. Okay, the amount is this 1,09,500. Okay, now we will see, we have to total. So this one is the heavy, 1,09,500 plus 2,000 plus 1,800. The total is 1,13,000. We'll write on both the side 1,13,300, 1,13,300. Okay, we have to less all such expenses from this amount, so we have to less all this 7,985 minus 7,990 minus 1,200 minus 2,300 minus 6,000. So we got 87,825 as our profit. So we have to distribute this profit. Okay, we have to distribute this profit in both the partners. Okay, so sorry, I have been discovered my mistake here, that we have to depreciate building as 5% and machinery as 3%. It was my mistake. I had been calculated building has been 3% and machinery as 5%. So let's rectify our mistake. So sorry for that. We have to calculate. Okay, for the machinery we have to do it for 3%. So machinery was 1,14,800 into 3%. Okay, 1,14,800 into 3%. So it is 3,444 rupees. So sorry students, we have to less it 1,14,800. So it is 1,11,356. And building we have to do it for 5%. 75,000 into 5% is 3,750 rupees. so it will be 71,250. We have to rectify this both amounts in this column also, in the depreciation column. So for machinery it was 344, and for the building it was 3750. We have to add them. 3444 plus 3750, it is 7194. So sorry students for the mistake. 7194. Let's rectify this profit also. Okay, so it is 113,300 minus 7985 minus 7194 minus 1200 minus 3200 minus 6000. So the answer here we are getting is 88,621 as a profit. Okay, so we have to divide them, distribute them among the partners. So we got the profit, so we'll write to profit to net profit carried down. We have to distribute them between the Daya and Shama, so we have to divide them by 2. So we'll get 44310 and other will get 441311. We have to give, when there is an odd number in the unit place, we have to give the another partner a rupees more. Okay, so we got the profit. This is on the debit side. We have to credit this amount if in the credit side in the partner's capital account. So we have to write by net profit. Okay, 44310 and 44311. Now after closing the profit and loss account, we have to close partners account. So we are closing the partners account. We have to add the both the amounts and we'll write here. So 1,60,000 plus 44310, so it is 2,04,310 rupees, and 1,20,000 plus 44311, it is 1,64,311 rupees. 1,64,311, and here it is 204,310. Now we have to calculate here. So as we have seen, the Shama do not have any debit balance. We have to write this amount as here. Okay, and we have to less 1000 from this balance. So 264,310 minus 1000, so we get 263,310. Now here the both the balances we have to write in the liability side. Okay, so the balance is 263,310 and another one is 164,311. We have to add both the amounts and we have to write total. So the total is 4,27,621. Now we'll tally both the side. So this amount plus 1,500 plus 14,500 plus 98,000 plus 700. We got, oh so sorry, we got 5,42,321 as a total. So we'll see this also. We have to match this one. So we have to total this. It is 25,000. Okay, plus 312,715 plus 68,000 plus 111,356 plus 71,250 plus 12,000 plus 22,000 plus 40,000. Okay, plus 40,000. As we got a different amount, so I'll check my liability side. The total of the Shama was 3,67,622, and we added them both, so we finally got the same amount, that is 4,82,322. Okay, so this is the first sum of the final accounts.